Hi guys, this is Richard Yi. Today is August 25th, 2011. Before I start, I want to extend my great appreciation to Steve Jobs, who yesterday resigned as the CEO of Apple. Our society functions on the basis of individuals pursuing their separate interests. And since our resources are limited, then exchange must be taking place between individuals in order to achieve the maximum utility or the maximum satisfaction. And that is how human society advances, because along the way of us pursuing better happiness, our technologies advances and human becomes more civilized. And that is how civilization come about, not because the government officials appointed scientists to do research or appointed entrepreneurs to start businesses to advance our human civilization, but because those scientists and entrepreneurs, they pursue their individual interest. Henry Ford didn't revolutionize the auto industry in the early 20th century because of the command from a government official. He did it because he was pursuing his self-interest. And because we have successful entrepreneurs like Steve Jobs, we can enjoy the technology, the level of standard of living that we have right now. So after S&P downgraded the U.S. sovereign debt on August 5th, the market has been extremely volatile. Dow Jones Industrial Average has down 6.28% since the downgrade, and S&P has down 8%. But in contrast to those major index, gold has made record highs, and to today is up 6.73% since the downgrade. And however, 6.3% is already a drawback because just 2 days ago, in the past 2 days, there was a massive sell-off because people were taking profits from the highs. But all those sell-offs cannot hide the extreme momentum of gold. So since gold has been hitting new highs and other metals has been really strong as well, many economists or financial commentators, they're yelling that, oh, gold is a bubble and you better sell off your gold and then switch other safer investments, for instance, treasury bonds. But let's think about this. Why does gold up 6% while the major indexes are down like 6 to 8%? Why is that? Well, the reason behind it is because gold itself is money. The strength in gold and other metals not only reflects the weakness in U.S. dollar, but it reflects the weakness in all other fiat currencies. It's not because people are uncertain about the future and they buy gold. Most people buy gold because they're certain that fiat money is going to lose value over time. That's why they switch to gold, which is both scarce and has value. Many people place great value on gold and silver. And besides, what does even a bubble means? A bubble means the price is not sustainable. It's going to collapse. And how does price collapse? All prices are determined by demand and supply. So the only two scenarios that would drive down the price of gold or any other prices is A, there will be a sudden increase of supply, which means many people are selling off, causing a surplus of supply in the market, thus drive down the prices. And B, there will be a sudden decrease in demand, meaning people suddenly lose interest in gold, in buying gold, right? The only this kind of two scenarios. So let's kind of analyze these two scenarios. Would there be a sudden increase in supply, which meaning many people sell off? Well, sure, in the short run, definitely there will be a sell off, right? As the gold price keep going up, many people will see, will sell off to see quick profits, definitely, right? That's the reason why they're in the market. There are speculators. However, the next question we should ask is, would those sellers quick turn into buyers? And my prediction is yes. Many of those traders will soon turn into buyers because they knew the weakness in US dollar. They knew that fiat currency is not sustainable, and if the US government does not get its financial house in order, it's going to printing more money to sustain itself, which will devaluate the US dollar, which would definitely create highs in the metals market, including gold. So as we can conclude, there won't be major sell-offs, and even if there are sell-offs, those sellers would be quick turn to buyers again. So now let's analyze the second scenario. Would there be a sudden decrease in demand? Well, the reason why those traders are in the market is because they knew the weakness in the currency. They knew that the fiat currency is not sustainable. Those value will be going down day by day, and as long as the U.S. financial house is not in order, they're gonna keep trading gold. So instead of asking whether gold is a bubble or is gold at its ceiling, instead those financial commentators and economists should question the government about if their money printing business is near the floor. The more the government prints, the higher gold and silver will soar. So it looks like that Ben Bernanke is gonna have a press conference tomorrow. I wonder what he's gonna talk about. At least he has a perfect record of getting every economic event wrong. I don't know when Bernanke is gonna officially release the QE3, or they might even not call it QE3 because it doesn't sound that QE anymore. It doesn't sound like a. I don't know when Bernanke is gonna officially release his QE3, and given that QE is no longer as magical as it sounded before, they might not even call it QE, right? They might call it something else. But believe me, QE3 is coming. Given the weakness in the U.S. economy, for instance, high employment and those recent economic data definitely show that the U.S. economy is sliding back into a slum again. So, and besides, the only thing that the Federal Reserve can do now is to enable QE, right? It has already lowered interest rate to 0%. What else can it do? It has fired all the bullets already, and now it has faced another recession. I mean, maybe depression even. So the only thing it can do is to buy our treasuries and have the government to do fiscal stimulus to the economy to kind of, even to give the economy back to life support. So what are some predictable results of QE3? Well, one is definitely inflation. Well, you might say, well, inflation has been low for in the past 2 years, right? Why would we worry about inflation? Well, one reason is that many of those newly created money are still in the Federal Reserve. So that was a graph called the Assets Reserve of Depository Institution. Basically, what the blue lines represent was the assets reserve those banks they put at Federal Reserve, right? So as we can see, before 2009, the line was flat because the banks they tried their very best to lend out as much money as possible to make profits, all right? But after 2009, since there's uncertainty about the future, so banks want to hold lots of reserves, so they're not lending out the fresh money created by the Federal Reserve at first place. That's why we don't have inflation yet. And B, the banks they want to keep their balance sheets strong. And according to the latest Federal Reserve H3 statements, we do see signs that those reserves are leaking out, meaning those newly created money are into the economy, and therefore inflation are about to hit us. Therefore, I would recommend, like everyone, if you have a chance, get rid of your US dollar first, because that's the first one to collapse, right? And if you have other fiat currencies, try your best to kind of convert them into gold or silver or other tangible assets. Therefore, you have a much better hedge when inflation hits. And that's it for today. Thank you guys for listening, and I'll be blogging again soon. Take care. Bye.